Hey, welcome to Nepi Invest Integrated Research. Two downgrades in one fortnight. So, this is my quick take on what's been happening with Integrated Research, a company that's been in the news in the past fortnight because two downgrades in one fortnight. I've never seen this before. They do say downgrades comes in threes, but usually those downgrades, there is a bit of time between them. But 2 weeks. Two downgrades in 2 weeks, I've just never seen that before. So let's get stuck into these downgrades. So the first downgrade was on December 18, and this was a fairly big downgrade. You can see they've given their revenue and profit forecast for the half year of 2021, and it was pretty much down on the previous corresponding period. Now they're given their forecast, they've revised those forecasts on December 30, only 12 days apart, and it's a significant decrease to their forecast. So revenue has gone from 41 to 47 million, all the way down to 34 to 37. That's a decrease between $7 and $10 million, and their profits have gone from 5 to 8 million to break even to 2 million. That's a decrease of 5 to 6 million. So something has happened in this business in 12 days for management just to say, wait, something's going wrong here. We have to revise our forecasts. And it's a concern that management have had to revise these forecasts only 12 days apart. Something is seriously going on or wrong with this business, or maybe there is something more broader of an issue within the economy at large. They have given some reasons or some excuses for these downgrades. The first one was based off unfavorable exchange rate movements. So this company does get money into international currencies, and when they have to bring that back to Australia, and because the Australian dollar is quite strong at the moment, those are the exchange rate movements unfavorable at that. And just year-to-date trading. Now the excuse or the reason is a continuation of customers deferring purchasing decisions. And the question I have to ask, and I think the market has to ask, is the deferring of those purchasing decisions, is that a permanent thing? Or is it going to return in the next half year? And I think that's a very important question, because if this is a permanent thing, the companies are going to be struggling in the next or the foreseeable future. Or if it's just a temporary thing, the company could return to favorable uptrend in their revenue and profits, which I've got here. So I've just graphed out their half-yearly profits and revenue over the past about 7 years or so, since June 2014. And we've just seen a consistent, slow uptrend in both revenue and profit from 2014 all the way up to this year. And I've just included their forecast, and we're just seeing a massive decrease in revenue and profit for this half year. And I think, again, the question is this going to continue into the next half year, or we're going to see a rebound back to what we're experiencing in the previous 7 years to return to that uptrend? And if we do see the return to that uptrend, you could say the share price maybe could become quite attractive. And this is the share price, and this is what's happening to the share price. The market has been hinting at this for us, and if we've taken notice of these hints, especially those shareholders, you could have gotten out before these two downgrades, especially around the AGM. So we did see the share price get as high as about not quite $5, just short of $5 in August. And then the share price started to retreat. And then around the AGM on 25th of November, the day of the AGM, the day after the AGM, we did see the share price go back about 8% on the AGM day and about 8% the next day. And that was a good hint to get out. And if you did see that hint, take advantage of that hint and get out at around $3.40 or so, you've been successful, because those two downgrades came out only 12 calendar days apart, only about 6 or 7 trading days apart, and we've seen the share price take a massive hit. I did have a look at the Hot Copper forums to see what the sentiment was. A lot of posts were suggesting $3 was a good entry price because this business is a very solid business. They are growing, and I think that has to be questioned now. And we have seen the share price now go down to $2.62. So is this a good entry price? Well, I would wait. This is me personally. I would wait for a while until we see a return to a bit of an uptrend in the share price. It could take a while, or we might see some positive news. So they could come out in about 3 or 2 months' time saying things are returned to normal. Those deferring customer decisions have gone back to normal, and that might put a bit of an impetus, give it a bit of an impetus to share price moving upwards. So there's no point buying now because you never know, there might be another downgrade in the next few months, in the next few weeks, or even. So anyway, this is sort of an example why you just don't buy into a company just because the share price has gone lower than it was in the past few months. Just wait, be patient, and you never know what's going to come around the corner. There could be another downgrade. So that's all I've got on integrated research, and there are 2 downgrades in 2 weeks. If you have any questions about integrated research or anything else, just leave a comment in the comment section. Otherwise, I'm not a financial advisor, so even though I am staying out of integrated research, you may think otherwise and may think $2.60 or so is a good buying price for this company. If you do need some guidance, some advice, make sure you seek out someone who is qualified and can speak to your own financial circumstances. Otherwise, that's all for today's video. Have a happy new year and talk to you soon. Bye.